Hello there, Maverick Currency traders. This is Rob Reinhold. I'm joined by Mr. Ankit Sharma, and take a look at that date. We are into our last full week of trading before the Christmas and the New Year's holiday. In this session, we're going to be talking about what happened last week. We had 4 central banks announce rates. We're going to take a look at the market where it is right here, right now, and we score everything from +3 to -3, and that tells us where to pair up the strongest against the weakest.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's get ready for next week.
Let's talk about last week. We did get a little bit of a pullback in the market, and we're going to take a look at a couple different markets, and you'll see that some of the markets are pulling back much, much deeper than others. So we're going to take a look at that. We had dollar and bond yields rally. The dollar is at 2023 highs, so the dollar is really, really strong at the moment and just getting stronger. Last week, we had 4 central banks. Let's get into them because that was really the big news of last week. The first one we had was RBA on Monday night. So RBA came out. They did not cut rates as expected, but the RBA has been one of the more hawkish central banks out there, and they actually changed their tune a little bit. So they said, okay, we're not going to be so strict, and there might be some rate cuts in the future. So the Aussie did not like that news. So remember, it's all about expectations. When we get into the other 4 central banks, I want to show you how things move, because here is a central bank that didn't cut. But what happened? Their currency fell for the week. Then we got the Bank of Canada. The Bank of Canada came out and cut 50 basis points, so 0.5%. But the market thinks that that is the end of rate cuts, and the Bank of Canada basically said the same thing. So what happens to the CAD? It goes up. This is where the reaction to the news is much more important than the news itself. So we had a 50 basis point rate cut out of Canada. And then this was really the surprise of the week. The Swiss National Bank really surprised the market. Expectations were for a 0.25% cut, and they delivered a 0.5% cut. So again, big surprise here. We saw the Swiss franc fall on the news. We'll take a look at that chart. And then we heard from the ECB, and they cut, as expected, 25 basis points. They're still one of the most dovish central banks out there. They did not change their tune. So when we take a look at the 4 central banks, the Bank of Canada was the one that basically said, hey, we're probably not going to cut rates in the future. All the other currencies went down on the news, but the CAD went up, even though it delivered a 0.5 point rate cut. Ankit, I know we were talking earlier about that SNB rate cut. What are your thoughts on that?
Hey, Rob. Well, yeah, it was definitely the biggest surprise for the week. And I must say that, just looking at the price action, this whole rate, sort of a cut cycle is not the same as rate hike cycle. Where we saw some monster moves. When this happened back in, 2022, when Swiss Bank actually started hiking rates, we saw some massive moves. So, this gets to tell you that there's a lot of things in play right now in the markets, and this is again more about these statements, the outlook and stuff like that. So I think that's what's really driving the markets. I mean, Bank of Canada is another good example where they cut, but then they said, "Oh, we're going to be doing more gradual paces from here on." So I think this is where we just want to be more focused on is their outlook as they go forward. But I still surprised with the S&B, but then again, I'm not surprised with that price action because this is where it didn't fall as much as it should have with that surprise of a rate cut. So again, this is where you just trade the price action in front of you.
Thanks, Ankit. Let's talk about the other reports here. CPI out of the US came in right as expected. A day later, we got the PPI, came in a little bit hotter than expected. That did not change the odds of there being a 0.25 point rate cut from the Fed next week. We also had employment change. As you can see, the economy in Australia continues to do well, adding jobs, unemployment rate falls. Then on Friday, Surprise here on the GDP of the UK. It was supposed to be plus 0.1, came in at negative. So we're definitely going to have to take a look and see what the effect is on the pound from that missed GDP report. So let's take a look at the equities first. Let's take a look at what happened last week. And you can see that we had just a slightly down week. Now, we've had a monster run. We've had the best year since 2019 in the stock market. So look, we're just pulling back just a little bit. Cryptos pulled back as well. But remember, cryptos have had a monster run. Down 6% as a basket, not that big of a deal. And you can see gold and oil. It seems like every week oil is up 4 or 5% or down 4 or 5%. It's really just going sideways. Nothing happening here. So let's take a look at the S&P chart. And then we're going to take a look at another chart. So here is the S&P 500. This is the 500 largest stocks in the US. And this is a market-weighted average. What it means is that each stock in the S&P has a weighting for how big of a company it is or how big the stock is. So a company like Microsoft, which is a trillion-dollar company, I mean just some astronomical amount, it's going to have much bigger effect than a smaller company in the S&P that's maybe only 100 billion. That's a massive company, but you can see Microsoft's just going to have so much more effect. We are seeing that the S&P had a small pullback, just a small pullback this week, but take a look at the RSP. So look at this chart. The RSP, this is the equally weighted, where every single stock has an equal weight. Take a look at this pullback, and this pullback's been going on now for 2 weeks. So when we take a look under the surface, the rest of the market is not doing all that great at the moment, but the large cap tech stocks are having a beautiful run. So what's happening is it's keeping all the major market averages from looking very weak. But then you take a look at something like the Russell 2000 and, take a look and see the fall we've had in the Russell 2000. So we definitely are getting a much bigger pullback in markets than we see just looking at the S&P. But ultimately, it is still a bullish market. And you can see this right here is more of what you should see in a bullish market. So we had the yen was down the most, Swiss franc down the second most, and you can see some of the growth currencies, the CAD and the Aussie did pretty well. Kiwi was weak as well. But look at that dollar. That dollar has continued to strengthen. That has really been the play here, is you just stay long dollars, just stay with the trend. So I know that I was short Kiwi for the week. It was a decent trade, but it wasn't where the big money was. Big money was in like dollar yen was the big trade of the week. Here we have the cryptos. You can see big fall across the board except for Bitcoin. Bitcoin up for the week. I continue to like Bitcoin more than the others for sure. All right, let's jump into a little bit deeper market analysis. We took a look at the equity markets. Let's take a look at the bond market. Take a look at this run. This is 5 days all the way up to 4.4%. This is only going to help the dollar go higher. It's only going to make it go stronger. And if we break out of that 4.5, watch out. The dollar is going to strengthen even more. So I continue to like the dollar on the long side. Here is the crypto basket. I don't want to spend a ton of time on this because, again, Bitcoin is staying strong and everything else is pulling back. I want to take a look at cryptos on an individual basis. But ultimately, you can see that this is still a bullish market. We did get a pullback. But we did get a bounce as well. So the crypto markets still look like they are in a bullish cycle at the moment. There is tons and tons of news this week, and it's because everyone is basically taking what they would have announced in the last 2 weeks of the month and jammed it into this week. So understand that this is the last full week of trading, and then we have 2 weeks of holiday trading sessions where the markets will be closed on Wednesdays. So let's take a look and just see what we have. This is a number that actually had a big effect last month. It was not something we look at a ton and not something we've talked about, but I think because of the move we got last month, we need to talk about it. And that is the manufacturing numbers coming out of Europe. These are going to be a big deal. I do like Euro. Euro has actually been stronger than I think it should based on their economics. we'll have to wait and see what these numbers come out and say. All right, next up, let's talk about CAD CPI. CPI has been coming down. The Bank of Canada has been lowering rates, even though they told us they're going to be lowering it a little bit slower going forward. That's expected as the inflation has come down and has moderated quite a bit. All right, Fed is on Wednesday. So FOMC, there is a 98% chance of a rate cut. That is a 100% chance. I don't think there's going to be much movement off of the report, but I do think this is where the move is likely to come in the dollar, is going to be at that press conference. We also have the Bank of Japan on Wednesday night. Again, it says tentative. I always see the Bank of Japan somewhere around like 11:30 to 12:30 a.m. on that night. They don't have a set time, so it makes it difficult to trade this one. And then look at that. A couple hours later, you've got the Bank of England coming out. They are not expected to cut rates. This is where I think the surprise might come this week. We've had some weak GDP. We've had some weak numbers. I think we could get either a cut or we get a statement that a cut is coming. Ankit, what do you think about that call? That this is where the surprise might come this week?
Yeah, I absolutely agree. I mean, if you just take a look at the numbers, they have not been as positive. And, we also have the CPI that's also going to come out. So, I mean, give us a better idea. But I feel like, yeah, this is where I was actually surprised to see that they are not planning to cut rates. It's pretty much every central bank is right now cutting rates except the RBA. And then, and I'm surprised to see Bank of England not expected to do one. But again, as we saw from last week, the S&P did surprise. So I think this is where, as you're going into these rate announcements, I think there's more chances that they either cut or have a dovish statement. So regardless, I think that would be bearish for the pound here. So I definitely do not like the pound here on the upside. I think there's more downside risk on the pound here, especially on either a cut or a dovish statement.
Yeah, totally agree. And then last, again, there's so much news I can't cover all of it here. But on Friday, we do have the core PCE price index. This is the Fed's favorite inflation number. 0.2 is what it's supposed to be. It was 0.3 last time, and that was a little bit of a surprise. And I think what you might start to see is if we get 2 or 3 months of slightly higher than expected inflation, that's going to cause the Fed to probably halt their rate cut cycle, which I think is one of the reasons why you're already seeing the dollar up and the interest rates up, because I think people are starting to see that the Fed might have to put the brakes on here a little bit. If that number comes out at 0.3, I would expect there to be a great reduction in the odds of future rate cuts out of the FOMC.
Hey, Rob, I just want to echo that. I mean, I'm definitely agree on the same page here. Again, if you just take a look at the expectation for rate cuts, we are at 98% for this rate cut coming up. But then again, going into January, we are at 81% that they're going to be holding. So it seemed like, yeah, this is where, you got to look at not just this month. I think that's already priced in, but people are looking at the upcoming months. And it seems like the markets are right now expecting a pause going into January, which again kind of explains why, we're seeing the dollar sort of, or the yield sort of rising over there, because I think the expectation after this rate cut is going to be shifting. So I think this next week statement will be very important because this is what markets expecting. The Fed could come out and say, no, we're going to cut rates. And I think that's where we can see a bit of a shuffle that happens. But as of now, that's where we are. And I think that's just really holding up the yields here.
Yeah, I totally agree, Ankit. Let's go ahead and jump into these currencies, score them from +3 to -3, and that's going to tell us where to hunt. All right, first off, I'm going to go into the cryptos. As you can see, Bitcoin is just in a big old high base. I mean, look at this high base. It popped out of the 100,000 for, a day or two, and it's just really just been hugging that line. But if you do take a look at it, it actually is a little bit more of an ascending triangle pattern. This is super bullish. So that's all you can say about Bitcoin is it's basing. How long is it going to stay in this base? We don't know. I'll take a look at the individual chart here in just a second. But there's no question that the trend of Bitcoin is a +3. +3 for sure. Moving on to Bitcoin Cash. You saw a pullback. So we had a pullback. Here's the thing, we did not have a very convincing bounce. That is not a convincing bounce at all. We like to see V bottoms, where we come down and we have a V, where it just bounces. This is telling us there's not as much strength in Bitcoin Cash here off this pullback. So I think you want to be a little cautious here on Bitcoin Cash. Going over to Ethereum. Ethereum had a much better bounce. Again, we talked about the V bounce we want to see. This is what we saw. We are running into some resistance here at 4,000. I think you're going to see the same thing here with Ethereum, where we just base here, and then ultimately, it looks like we are going to break out to a high above 4,000 on Ethereum here as well. So I do like Ethereum. And here is Litecoin. I've said for the last month or so that if you weren't going to trade Bitcoin, you wanted to trade Litecoin. I'm going to change my tune here. Yes, we got a little bit of a V bottom here, but I do like Ethereum now better than Litecoin. Ethereum is already back up to the last swing high, and you can see Litecoin is still about 20% away. So I do like Ethereum if you aren't going to play Bitcoin alongside. All right, Anka, take us through the Forex.
Absolutely. Let's just start with the good almighty dollar. And I think this is where it's all about the dollar here. Again, I would say that this market price action in the dollar kind of reminds me of 2022 when yen was breaking out some very key levels. And everything else is kind of holding on the currency basket. So this is exactly what we're seeing right now, where a lot of the things are kind of holding, but then the dollar is just breaking out some key levels. So I mean, here we are, looking at the trend score, we are at +3. There's no doubt about it, and we actually broke out. I was kind of waiting for that breakout, and again, we got a breakout this week after almost consolidating for almost a month here. So bullish price action, velocities there +2. Again, there's nothing nothing else to say here. I think that's just really where the dollar has been. It's been one of the best currencies in the last 2.5 months, and that trend just continues to be trending higher. Now we talk about rotations, and the yen was the one that really started to get strengthened, especially over that Thanksgiving weekend. The whole week, the yen really started to take off, and it was really good, strong for the last 3 weeks. But we're noticing that it's kind of coming back off. So again, there's definitely a lot of expectation for Bank of Japan to probably move their rates in January. But I think as we go into next week, the expectation is not there. So again, I think this is just one of that trade that's just running on expectations. But again, clearly right now you can see the trend score is a +1, but then velocity is a -3. So it seems like it's just giving back some of the profits or some of the strength that we've seen is just giving back. So even though if it pulls back, we still have the prior breakout point is still as a support. So in the shorter term, I think the yen likely to pull back, but I think that will be the first area for that yen to sort of bounce off of that. The prior breakout is now the support area. So that's where we are at. I think as we get into next week, we have Bank of Japan. Likely it will not be a big mover, but again, I think that will be the one to watch out for. But the shorter term, the momentum is definitely onto the downside. So that big momentum that we have on the upside is sort of kind of faded into a negative momentum right now. Now, Swiss franc, and I must say, this is one of what we call it, the currency that hasn't really followed any rules and norms. And this thing, as you can see, has been in this range. This range that you can see on a currency basket. I feel like we have been in this range for almost the whole part of the year. And here we are with that rate cut. You can see that big drop, but then right after that, there's no follow through. I'm very surprised with that. Because we go back to 2022 when they did raise rates, which was a big surprise, and then we saw big movements off of that. So I think this is where you don't want to be reading too much into what should have happened and just pay attention to the price. That's not what you're seeing here. I don't really love the Swiss franc here either on the upside or to the downside until it really breaks out of that range. So right now we are right in the middle here. Maybe we'll go a little bit down. Well, but again, I don't really love it on the upside. But at the same time, I don't really love it at the downside either. So I'm going to sort of keep that on the sideline until it really start to give me that consistency, the movement that's lasting for days at a time. But that's not really what we have here. Trend scores to 0, just treat like that. I think it would be might a strong currency today and a weaker currency the next day. I think that's the kind of price action we expect on a currency that's giving us a zero score. Now, euro, on the other hand, actually looks much better. I mean, you can take a look at that resistance level that we had. We broke out, and that's again after the ECB rate statement that we had on Thursday. We're breaking off that. So I do like euro more over the Swiss franc right now, which is again a big surprise because we have mostly liking Swiss franc long than the euro. So I think that's shifting here. So the Brent score is a +2, and you can see the velocity is a +3. So I think this probably have a little bit more room to run, especially as we go into the pound, and now pound is start to pull back here. So remember we talked about one falling in favor, one getting more in favor. Pound just hit that resistance level and just pull back. So going to next week, I don't love the pound long here. We got that resistance there unless it breaks out. I think there's more headwinds for the pound in the coming week. So we have a velocity scores of -3. Even the trend is a +1. I don't really love this as a long, but probably want to see more further pullback. Now let's talk about other currencies like the Canadian dollar. So again, if you take a look at dollar CAD, you would think that hey, CAD probably the weakest currency out there. But then again, if you look at CAD basket, it's sideways. We got the jumbo rate cut from Bank of Canada that was all priced in. We didn't see a big move off of that. But we did notice that the change in their tone or for the upcoming rate cut. So I think maybe CAD is going to stabilize over here to probably going higher. But again, right now, trend scores is 0. So I can only make an assumption here. But I think if it breaks above that 20-day moving average, if we get a break above that, I think the CAD can really pick up a little bit more strength over here. But until we see that, we could consolidate a little bit longer. But right now, it's all about that story, the dollar story, and we're not really seeing other currencies participating as much. So I'm paying close attention to dollar CAD. I'm also paying close attention to CAD basket. But yeah, I don't really love this as a short. I would rather see if it breaks out to the upside. Now the Aussie, and you can see that the Aussie has broken lower, but then it's kind of going a little sideways here a little bit. So again, this is one of those currencies that are with the RBA turning a little dovish, but then we had the employment report that was way stronger, better than expected. So I think the Aussie likely to drift sideways here a little bit. I know it's a -3 on the trend score, but we're not really seeing a big downside, in that. And again, like Rob said earlier, because why we're not seeing that? Because the markets are still up. The overall S&P is still holding up, and again, that's really where we probably see more weakness in these Aussie if the markets are really doing poorly here. So I think for now we got a support and we got a resistance. I just expect this to probably go sideways a little bit here. And then that would lead me to the Kiwi, which again looks like a better short to me. But again, that support level that you're seeing there, that's a support level if you go on a currency basket that was tested like 3 times in the past. So, we are seeing a bit of a slowdown there as well, even though the trend score is a -3. What we are noticing now is a bit more sideways price action. So I think this is where it kind of reminds me, like I said before, 2022, where some of the currencies are going sideways, but then you have big movements. If you take a look at Kiwi dollar, dollar CAD, Aussie dollar, and then you look at currency baskets and you don't see that. That's just because most of the movements are getting driven by the dollar here, than actually its other counterparts. So I think some of the currency baskets are kind of going to go drift sideways, but the dollar is the one that's just going to continue, making the moves both on the upside and to the downside. So that's really where we are at. Going to next week, I think if you take a look at the score, I really like euro. Dollar again looks like a great, but we also have the FOMC, so keep that in mind. But then on the weaker side, we have Aussie and Kiwi, but again, they're probably going or drifting sideways here a little bit as well. So I personally think that it's going to be all about the dollar next week. It could either propel higher, further, or it could pull back. I think we're going to see a big move in the dollar regardless one way or the other. Back to you, Rob.
Thanks, Ankit. And I totally agree. Euro and dollar are my two bullish candidates this week. And, Sadly, that's all we have is Aussie Kiwi on the weak side. I don't love either of them really short. I like Kiwi much better than Aussie, but they don't look like great shorts. Now that's okay because Euro and Dollar look like really good longs and we have to pair them against something. So again, I think if you're not going to pair them up against the Aussie Kiwi, I actually think the pound is something that you would also look to pair them up against. But in the short term, where is the velocity? Well, we still see velocity in the Euro and Dollar, and we see that negative velocity in the pound. So I think it's pretty clear where we should be looking here for potential trades. We're looking for Euro longs, Dollar longs, we're looking for Kiwi shorts, and possibly some pound shorts. We'll take a look at Bitcoin as well. Let's actually take a look at Bitcoin first. Just a really, really nice ascending triangle pattern here. I mean, this is just a beautiful, beautiful pattern. You can see it's already pushing its way up above that resistance, and we're already trying to go higher. The only question is, when does it go? When does it go higher? I personally like it even here. I think you can start to accumulate it here. Would I buy all of my position in one shot? Probably not. I probably would look to leg in, but I do like it even better on these pullback days, like this pullback day. This pullback day is a great day where it pulled back. I mean, this pulled back like 10% in a day. This day where it pulled back. This day even had a little pullback. So I do like it a little bit better on pullbacks. If we could get one more pullback down into this 98,000 area, that would be the real area I would really look to try to pick it up, is right around this 98,000, because it definitely looks like it wants to keep going higher. There's no question that this kind of price action, after you break a major milestone, there's no selling coming into it. There maybe just is a little bit lack of buying. So for me, Bitcoin looks good. I think the timing is going to be tough because it's already kind of broken out of certain levels. I don't think you want to chase it all the way up at 104 on a breakout. I would much rather accumulate it down here. Any pullback to 98,000, I'm definitely going to be looking at some entry points on Bitcoin. All right, next up, my favorite trade of the week is Euro Pound. So here is Euro Pound on a daily chart. And you can see it has been a one-way trade for a while. Just falling, bouncing, falling, bouncing. This is what we've seen. All right, we don't have a major trend change turn yet. So if we're looking at things we usually take a look at for trend changes, we like to see the 20 and 50 moving average have crossed, and we like to see that they've actually started to turn up. So as far as a trend trade, this is definitely going to be early, which means it is going to make it a counter trend trade. I am not a big fan of counter trend trading. If any of you have tried it before, it's a great way to take some pretty good losses, always trading against the trend. So whenever I'm looking at a trade like this, and I'm looking at it, slapping me in the face saying, Rob, this is a counter trend trade. Okay, I better have some good technicals on some shorter time frames, or else this is just me hoping and wishing. Here we have a 4-hour chart, and you can see ton of momentum has come into this. We've got a lot of room to go higher here. But that being said, that doesn't mean it's a perfect trade right here, right now. I would much rather be entering this trade on like a base like this. So please give me a base. Give me a base here right around the 83 cent area, and let's just give me about 5 or 6 candles here. Then on a breakout, I would feel much better about going long on Euro Pound. If you want to take a look at another one, Euro Kiwi is also one you could take a look at. This one looks much better on a technical basis. It does not have as much momentum as Euro Pound does, but on a technical basis, you can see that we do have 20 trading above the 50-day moving edge. We do have these lines sloping up. We are seeing some more strong price action. So for me, this is probably the safer trade, but I do think that Euro Pound is going to be a little bit more velocity. Okay, what do you want to take a look at?
Hey, Rob. Well, yeah, those are great setups. Let's just start with the dollar basket. I just want to address the dollar basket because, that's really where I have a lot of questions on. Because, take a look at that. Now, if we zoom out, this is a level that have held in for the last. I mean, take a look at that resistance there. So we have to retest it. We have tested that level one, two. This is the third time, and we're getting a bit of a breakout here. So the question is that, hey, is this a confirmed breakout? Should I go continue buying the dollar here? And again, I think if you just want to stick with that technical, again, that's what it's telling us. That's the level of resistance that we have. But I think the difficult part right now, going to next week, will be the FOMC, because again, if they come out with a statement, Mark is expecting one thing. If they come out with a statement that doesn't echo it, I think we could see that correction there. But again, can't deny that the dollar price action is just really strong, and go into the daily chart, we can see that it broke out and it just, kind of closing above that high there. So, these are the ones that, if you want to trade your opinion, you might just don't want to trade it, but then that's just really where the movement is. So I think next week, dollar probably going to have a big move on one way or the other. But if I really want to go with that premise of dollar long, pound dollar is the one that really pops up in my head. Because if you take a look at it, this one, the slowly momentum is kind of weakening here. And take a look at that one. It does have a lot more room to fall. There's that support level at 125, which is a reasonable expectation for this to fall. That's still a decent pattern. Had a bear rally, and it just maybe retest that prior support. So pound dollar goes on the top of the list here if I want to go pursue that pound long trade. The second trade, again, I will still take a look at is pound CAD. Same thing, we looked at CAD, and I think CAD maybe can strengthen a little bit, at this point, because we got the rate cut behind us. The bank's going to slow down, and again, is there room for this to fall? I think you can see that there's a nice triple top on this. So if you look at the room for this to fall, this has definitely more room to fall. The prior breakout point become the support area. So again, this is again one of those comparisons between the dollar and CAD. I'm looking at both pound dollar and pound CAD. But right now, again, like I said, dollar is undeniably the strongest one. But then as we go into Wednesday, and depending on the outcome, if the dollar falls out of favor, I won't be hesitating. I think that would be the time to maybe I will switch into the CAD. But until then, I think dollar probably continue to stay in the lead. But decent levels, decent setups that we have. I like the risk to reward on these positions here as well. So yeah, those are the ones that I'm watching.
Thanks, Ankit. And let's just take a look at dollar yen before we break this out. This was the best currency pair last week based on total movement. And you can see here we have, we're reaching into this 155, 156 area. I think we have a lot of momentum moving into it. But remember, when we get to these extreme levels, we start to hear about the Bank of Japan intervention. But we also had it all the way up to 162 here earlier. I think this pair has some room to go. And if we have a little bit more bullishness in equities next week, this should negatively affect the yen. I think dollar yen could be a real solid trade as well. As you can see here, we already kind of had a breakout from this little base here, breaking out at the moment. So I would like to see pullbacks or bases before I get into this. Yeah, we're getting into a little bit of overhead resistance up here, but I think we still have 150, maybe 200 pips before we really start to run into anything real serious. So as we always say, trust the trend. The dollar's trending higher. I know that we could all come up with a ton of reasons why we don't think it's going to go higher, but we could have come up with those same reasons a month ago. Stick with the trends. Dollar likely going to be the easiest, safest move, but we do have FOMC on Wednesday, so watch out for that. So 3 central banks this week. We had 4 last week. We're definitely getting our central banks in before the end of the year. Everyone have a great weekend, and goodbye.